This is a futures trading strategy that works on all time frames, but I think it's best for scalping. You can use this on every asset, every time frame, any market that has enough volume. I'm going to demonstrate this on the ES, which is the S&P 500 2000 tick chart. So right here, what we're looking for are spots where we have a range. And what I mean by that is that prices are mostly going sideways. Yes, there are some higher highs and higher lows throughout this here, but we're looking for areas where we find a range, where we're kind of just sideways overall. So the first thing we want to do is identify where our range is. So you can kind of see here that at this level here, price kind of bounced down here. It rejected these highs. And if we drag this over, you can kind of see that this range came into play. Now, it wasn't exactly perfect, but it was there. We can even drag this a little lower, and you can drag this a little further over. And you can see that basically these lows came into play. These highs came into play. Now, when we're in a range, we're looking to go short off the highs and go long off the lows. You can find ranges on most trading days. There's usually periods of time where we have a range, and all a range is a period of consolidation, but you can take advantage of trading it between the highs and the lows. So as we're going sideways here, we get this point of time where we break through the bottom of the range. And then after we break back into the range, this is where we can wait until we find an opportunity for entry. Now, when we get towards the highs, we can look to take a short. So what we have here is a short-term uptrend. Now, we want to be aware of the short-term uptrend. While we're in a short-term uptrend, we don't want to take a short. So right here, we have a short-term uptrend, but then we get a close outside. So after it moves to a new high, we can look to take a short. Here's a really nice one here, because what we have here is we have a range, we have a short-term uptrend, and we're getting towards the highs. So we break through the bottom. We get a first entry short, then we move up, and we actually get a second entry short off the top of the range, and it is also a triple test. You can see one test right here, second test right here, third test right here. So this is a spot where we can look to take a short after this candlestick closes. We can enter one tick below with our entry, put our stop loss one tick above, and we can look to scalp out a portion of our trade, move our stop to break even, and hopefully get a runner. Now, when it didn't go to the bottom of the range and it actually stopped here around the middle, and then it went higher, this is where you don't want to look to take a short again, because when we're looking at range activity, what we want to see is rejection of the highs and support at the lows. We want to see it bouncing between. So when it did this and it failed, now you will get failures in ranges. When it failed back in, that's still good. But when this didn't make a push all the way back to the lows, that's when you start to have to worry that we might actually get towards the highs of the range and possibly break out of the high side. So you know that from this movement, and that is why we take a scalp in there. You could scalp near this midline right here, leave a possible runner, and maybe you catch a move all the way down to the lows, maybe not. In this case, we have a winning trade. Now, if you want to look for a long, here's another opportunity over here. You can see that price is getting pretty sideways. So let's just take a look here. We can maybe draw here, right there. So you can kind of see as the market was moving here, after this period, we made the new high, we came down, we kind of were still sideways, and then we went into this little range down here. Now we did fail out the bottom here a little bit, but that's okay. You can see this close, you can see these highs, you can see a rejection of the highs, support at the lows. Even here, it still maintains some support. You can see the midline coming into effect here of this range. Now, in this case, it didn't go to the high right there, but it came back to the low. Now, on this level, we have a 1, 2, 3, 4, like 5 tests of the low here, 5 separate tests. And this is a 1, 2, 3 triple test with a higher low, bullish bar. So we can look to possibly take a long there to ride it to the high of the range. Now, again, we can scalp out a portion, especially near these highs, and possibly leave a runner and then ride it up. And this one would have actually gotten you a pretty far runner. And what we can do here is, as we're in the trade, we can look to possibly draw a short-term trend line and trail our stop with the trend line as it's going higher behind some of these candles. And you can see that you would have had you could have gotten a nice runner there if you held through. And that is another example of a really good range trade. A triple test. This one here had a little more confluence, of course, because we had a second entry short and a triple test and a lower high, and the short-term trend played out. This one, on the other hand, was still a triple test, but it's more than a triple test because of all the tests of the level. And we got it at the lows within a trend that started. So that's a really nice one. And you can find trades like this every single day. On every time frame, you can find these. And you will find periods, even on trend days, you will find periods where we have ranges and really good trading opportunities. So this is just an example of one day. But if you zoom out on any chart, you'll see these. If you zoom way out like this, you can see periods like in right here where there's a nice little range working. You can see periods in here where there's a nice little range working. And so depending on the time frame, the asset that you trade, as long as there's enough room in between the highs and the lows, there's usually some really great trading opportunities in ranges. A lot of people tell you not to trade when the market's moving sideways. I actually think that ranges are some of the easiest things to trade, even more than trends. Because sometimes in trends, you don't get a really good trading opportunity. You don't get a good entry before the trend takes off without you. But in ranges, a lot of times it's going to keep coming back and bouncing back and forth with consistency, and you get a ton of great opportunities to take those trades. So chart it on the asset that you trade and see what you think.